very tough run, unprecedented the past 2 years. You're talking about 2020, but then also a bit of 2021 because of the COVID-19 pandemic's impact on households and businesses. Many have lost jobs. Those that still have them are literally hanging on a thread. I don't know how you look at that.
And of course, we noticed that the prices of all consumable goods have gone high. And it's very challenging that many are thinking, how do we make it?
Now, talking about adding salt to injury. Now, beyond lamentation, how can people move from here to a good spot?
I think the first thing is thinking positively. We've come through the storm before. We'll definitely overcome this.
Welcome. It is Man and Markets, and I'm Charles Ward, your host.
And I'm Shamim Keimatovu. MTN Uganda has offered its shares to the public. And one wonders whether that actually adds to the capital market. Well, wonder no more, because today we speak to one of the captains in that business.
The capital markets performance in Uganda over the past 5 years has seen a remarkable increase in investors' interest in collective investment schemes and unit trusts. And this really is in line with our strategy of trying to get more and more investors to invest through unit trusts, because the unit trust managers tend to be best placed to know when and where to invest in the different asset classes of equities, bonds in the region, as well as in Uganda. So I think this message has been understood well by most of the investors out there, and that's why we're seeing an increase in participation of retail investors in this class of investment opportunity. Certainly it will. It's a large listing, about $250 million, equivalent in Uganda shillings. Is probably double the combined total of all the listings, all the IPOs since we began listing companies in Uganda in 2000. So it's certainly going to be a big contributor to the performance of the Uganda Securities Exchange. So we're just waiting to see the results. I think it's got about a week to go, if there are no extensions. So let's wait and see, but I think it's going to certainly be a major contributor. I know MTN Ghana was trying to raise 3 times the amount of money MTN Uganda is trying to raise in the IPO in 2017, and they raised about a third of that, but they're still listed. So let's wait and see how Uganda turns out to be. I think it's really about education, and we're doing a lot of work with our intermediaries. We've also instituted this investor resource persons program about 4 years ago, which is doing quite well. The COVID was kind of a blessing also, because it forced us to go to the e-platforms and to use the radios more, to use the TVs more. And we're seeing a lot of interest from people about where to invest, about investing in financial assets. And this also contributed because traders, many of the people who are running small businesses, are unable to carry on the way they were doing before, importing goods from the Far East. So they've been looking for a place where they can keep their money that is quite safe, but also gives them a reasonable return. And I know unit trusts provides that flexibility, because you're able to draw your money anytime and still have the interest accrue on a daily basis. So I think many Ugandans are starting to realize the advantages there are in investing in financial assets from that perspective. And that really is testament to the growth we're seeing in that asset class, as I was saying earlier. Well, look at capital markets on 2 sides. There's a side of investing, that is those who have savings, the individuals and institutions like pension funds who are trying to invest their savings, but also the businesses out there which are trying to raise money. And that's why we're continuously preaching the message of raising market-based financing or non-bank financing, because most businesses understand the need to raise money from, from banks. But capital markets provides a complement or alternative way of raising money for businesses through the issue of bonds, placed privately or publicly, the issue of securities. Even those companies at least may not raise money to grow their businesses, but in the future, if they want to raise money to finance their growth, they can always do a rights issue. They don't happen very frequently, but rights offers are one way in which listed companies can raise money. So the capital markets provides an opportunity for companies to raise money through an alternative way. And I believe if banks know that companies have many alternatives, then it creates competition in the financing space and also helps to reduce the overall cost of financing of enterprises. Yes, we know the economy is going to be opening up fully in January, all the risks notwithstanding, but I think it's a good opportunity for many businesses to reset. This has been a challenging time for most businesses, but if there's a time when businesses needed patient capital, it is now. And that's why many businesses need to consider raising long-term money, 10-year money, as opposed to, I think most banks can only go as far as 5 years. With a few exceptions, they might go to about 7 years. But this is the time for businesses that have good corporate governance practices in their operations to borrow for as long as 10 years. Now, the government has issued a bond of 15 years and 20 years. So a benchmark has been set. The real mature businesses could even consider issuing bonds of 15 years. So the economy needs patient capital, businesses need patient capital, and so I really just want to urge them to consider this form of financing, especially through bonds, through the issue of corporate bonds. I know that the National Development Plan has a component for private sector development, and one of the issues there that the government is trying to promote is financing of businesses through private equity. But if you look at the private equity regime right now, the tax regime, it's not very efficient for establishment of private equity funds in Uganda. So we are in engagements with the Ministry of Finance to essentially exempt private equity funds that are established in Uganda to be able to not pay the multiple layers of corporation of tax. That's the dividend income tax from the companies that they invested in, the corporation tax for the vehicle that essentially invests in these companies, and then the withholding tax on dividends that for the investors, the likes of NSSF or the other institutional investors that might invest in private equity funds. So we're trying to get the government to understand that these private equity funds are essentially pass-through vehicles through which those who have money invest in those who need money, and they need to be exempted from those multiple layers of taxation. Now, once that is done, I believe we're going to be able to attract quite a bit of funding from institutional investors, short-term and long-term, not just in Uganda like NSSF, but even in the region. Well, let me start with those who want to invest in capital markets. The most important commodity in investing in capital markets is information, good, reliable information. And that is why we continuously ask those who want to invest in capital markets to seek advice from our licensed intermediaries and not just invest in things that seem to be too good to be true. I know there's a craze going around of Bitcoin and many other cryptocurrencies, but no one really understands what those are all about in detail. So it's important that investors out there or savers out there get information, and if something seems to be too good to be true, take a pause and think about whether you're focusing too much on return on investment as opposed to return of your investment, because you might invest, you might think you're investing, but you never get back your money. So it's really important that they get information as much as possible. They only deal through authorized or approved or licensed intermediaries. And there are regulators all over the world. So whether a product is coming from abroad, the important question to ask is it regulated? Are you a regulated service provider before you can think about investing? Now, those who want to raise money from the markets, pension funds are growing all over the world. We've seen the rapid rise of NSSF assets in Uganda, but that is happening all over Africa. And these pension funds need to be deployed meaningfully. Now, the biggest user of pension fund money at the moment is governments. But the private sector also has some space to play in there. Now, if companies organize themselves well, we call it corporate governance, but it's essentially just being professional in the way they manage their operations. If they keep their records well, they've got no liabilities, either litigations or statutory liabilities like tax liabilities that are going to affect the value. They're in a good position to be able to issue a prospectus or to issue an information memorandum, privately or publicly, for debt or equity, to raise money. And many times we've seen that most of these corporate bonds that are issued, you don't typically find more than 25 or 30 investors. So technically they're private placements. And that is one easy way in which these bonds can be used to raise money from pension funds. So companies just need to organize themselves. The biggest security that most investors have in their ability to get back a return on the investment is how well the company is managed. And that is why we pay a lot of attention to the governance of companies. So if companies could understand that this is really a license to operate, or a license or an ability to be able to raise quite a bit of money, they will pay a lot more attention. I'll tell you that we've seen a case in Brazil where the Brazilian regulator tightened the corporate governance requirements for companies to raise money from the public. And those companies were able to get a higher valuation on their equities because investors had more confidence in the fact that these companies were well run and the risk levels reduced. But if a company is not well managed and is trying to raise money, investors are perceptive, they're pricing this risk. So if you think you can get a valuation of, say, earnings times say 12 or 13, in fact, investors might be only willing to pay you earnings times 5 or 4 because they see you as a risky enterprise. So the more you reduce the risk in your enterprise, the more you're likely to get a better valuation for your business if you're issuing shares or equity to the public.
And with that, we'll come to the first segment of Man and Markets. Don't go away. We'll continue after this break.